Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, August 7th, 2009. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. And Mexico City, it's 9:30 a.m. If you need to reach us during the broadcast, phone in toll-free at 1-866-67-CATEX. Our AOL instant mail address is CATEX-TV. On this day in history, not too much of terrible notes. I'll mention something that happened yesterday in history. Actually, it happened yesterday in 2009. The New York Yankees finally defeated the Boston Red Sox last night at Yankee Stadium, the first time this year. So we'll see what happens. The stock market's up about 140 points now, and that's after a little bit of a lackluster day yesterday. It lost some steam. Here's the reason it's up. We'll go right to it. The employment numbers are out in the United States for July. Apparently, U.S. employers cut only 247,000 jobs during the month of July. This is the least that they've cut in any month since last August. Economists had been expecting that non-farm payrolls would drop 320,000. Instead, they only dropped 247,000. Now, with the new numbers that come in, the unemployment rate has eased down to 9.4% from 9.5%. It also means that the unemployment rate that people had been expecting to rise to 9.6 to 9.8% sometime by September or October is apparently going to be steadied, if not reduced. This is why the stock market's jumping. One reason the stock market might be jumping, or would have been jumping if this was back in the old days and AIG's stock really was valued at what it used to be valued at, would have been this news. AIG reported net income of $1.8 billion in the second quarter of the year. This compares to $5.4 billion in the red for the second quarter last year. AIG was helped by net realized investment gains of $676 million. This time last year, they had lost $17 million in investments during that quarter. General insurance net premiums written were almost $8 billion in the second quarter, a 19% decline compared to last year's second quarter. Commercial insurance saw net premiums of about $5 billion, which is a decrease of 18% compared to the second quarter last year. The dips were primarily driven by the economy's continued effect on construction, real estate, and transportation businesses, and of course the strategic decision to maintain underwriting discipline. Those items represented about half of the decline in premiums. The remainder of the decrease stemmed from what AIG says were challenges on the business across the entire portfolio. That means people are not renewing with them, in plain English. AIG-related news as well. Why is this man smiling? Well, he left the courtroom still continuing to deny any guilt, any culpability. The SEC, when they make settlements, as they did yesterday with Mr. Greenberg, to have him pay $15 million to settle claims that he manipulated AIG's earnings, when they make a settlement, they prohibit the parties from talking about it. He continued to talk about it. It's unclear as of today whether or not the SEC is going to react and pursue him for talking about it outside the courtroom. But he should be smiling. The case was for far, far more money than $15 million. Some more earnings are coming in. Allianz reported that their profits fell. Operating profits were down to about 3.2 billion euros. That's down 34% for the first 6 months of 2009. First 6 months last year, they were at 4.9 billion euros. Property and casualty operating profits were the worst hit. They dipped by more than 41%. So Allianz is facing some choppy waters. Down in Bermuda, the Catlin Group is not facing any choppy waters. Stephen Catlin said that premiums and pre-tax profits for the company are up 60% over the first half of 2008. Some of the financial highlights included new records in gross written premiums, net premiums earned, and net investment return. Their combined ratio did suffer a bit. It went up to 96%. This is up from 91% at the same time last year. Mr. Catlin also announced that Christopher Stuck, who is the finance director and has been since 2003, will step down at the end of August. He'll be replaced by Benjamin Muley, who was appointed as a director on June 30th of this year. Another personnel move that came in, look at this picture. This is a very young-looking fellow. He's now the head of Zurich Financial Services. He's Martin Senn. He's 52 years old. He's a Swiss national. He currently holds the chief investment position at the insurer. He was chosen yesterday to replace James Shiro, who was an American who held the position of CEO of Zurich since 2002. Our congratulations to Mr. Senn. It's always good to see youth coming into the industry, although at this point maybe 52 is not so young, although who knows. Here's an interesting story. We followed this news over the past few months as Aon was involved with the Financial Services Authority regarding overseas business. Aon came to a settlement with the FSA that included a significant tightening of their books to prevent some of the practices that the FSA was accusing them of. Aon is now apparently trying to get the FSA to clarify its position over the transacting of overseas businesses. This is amid concerns that Aon might have that a two-tier regulatory system may be developing. The Insurance Insider is the only one reporting this. Aon is believed to have expressed concerns after Jardine poached Aon's aviation team by pulling in a number of high-profile brokers. Aviation was one of the parts of Aon's business that was reviewed during the recent investigation into payments to overseas third parties. Aon ended up paying a record FSA fine of about £5.25 million in January of this year for having insufficient controls on risk management systems. As part of the probe, Aon overhauled its whole system relating to managing business produced through overseas third parties. And I think what Aon is asking now is whether or not there's going to be a second tier of regulation for people such as JLT, who apparently Aon is concerned may be going right after that same business as a result of the poached employees that left Aon. A while back we were trying to figure in January of 2009 which Aon employees were involved in that transaction the FSA was looking at. I think we might have seen our answer today in the development. Stock market still up about 139 points. We'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
On July 17th of this year, the Ritz-Carlton Hotel and the Marriott in Jakarta, Indonesia were bombed by terrorists. This morning, Indonesia is reporting that one of them has been arrested. This is a gentleman named Nurdin Mohammed Top. He was arrested for the bombing of the two hotels. He's one of two people suspected of being involved in the blast. He was taken into custody.